Hi, everyone. Thank you for staying. This is the last panel of the day. Good afternoon, I should say. I hope everyone has enjoyed the conference so far, with many great panels and conversations. I should imagine that the storm outside has helped us a bit of attendance today as well, so thank you for staying on. We have heard on the previous panel quite deep conversation on climate tech, how climate change will disrupt some of the traditional industries, but also how climate tech can lead to new opportunities in the space and in the investments. This last panel will bring a wider aspect of the ESG and impact, and we'll try to talk about particular aspect in the Asia-Pacific region. My name is Kasia Zatorska, and I'm a senior manager at the Sustainable Investment Consulting team at Ogier Global. And I'm joined today by these two lovely ladies, Ling Cheah, operating partner at the Wavemaker partners and the chair of 𝐻𝐢𝐬𝐿, a low carbon and low waste distribution technology for wine and spirits, and 𝐬𝐮𝐬𝐿, founder of HerValue, the largest women-only empowerment organization serving professionals in the finance and asset management industry in China, and also a nominee for Forbes 30 under 30s, as I've learned today. So welcome to you both, to the panel. Today, I would like to start with a word, sustainable investment, because I think it has grown to be having quite a lot of different meanings, depending on the type of investors that you're talking to. For us at Ogier, we see a full spectrum of ESG strategies being implemented. There is definitely an environmental and climate change focus, but there's also increasingly more social and governance side of things. So how about we start off by talking about your own journeys into the ESG and how you have, over the years, have seen that ESG has come from the niche of breaking the barriers to something that is becoming a bit more mainstream. How did you have seen, how have you seen this role in your own professional career? Ling, maybe you can start.
Sure. For me, it's, I used to think, because we are tech investors at Wavemaker, we look more for tech in order to bring new products and solutions into the market, solving problems. But what I found out through being chair of 𝐻𝐢𝐬𝐿, which is circular packaging for the wine and spirits industry — I should have brought a keg and make everybody stay longer. We essentially do circular packaging for wine and spirits with the mission to eliminate the use of single-use glass bottles. And in fact, it's really nothing groundbreaking technologically. It's just using a new way to distribute the spirits, and at the same time, and which actually brings down logistics costs by 90%, okay, and reduces carbon footprint by 60 to 90%. And it's really going back to just putting the spirits into a bigger container and cleaning it, sanitizing it after, and coming back. Of course, there is a layer of software that we're now using to make it, plus. But at the bottom of it, it's really just using a more innovative way to distribute. And so for me, the insight is that, so one, you don't need, extra, quantum computing and convergence of, artificial intelligence and data, none of that. It's really just a new way of doing it, right? Mm-hmm. And that also makes me think, like, there are, 80% of global GDP has committed to net zero.
Correct.
Not everything has to be inflationary, because this solution proves that we can reduce cost by 90%. And not everything needs to be high-tech, so, super high-tech. We can use existing tech in order to have, and we call it, having a drink without giving the planet a hangover. So, we actually save up to 0.5 kilo of carbon per bottle that we don't use, and which uses our solution. And I think lastly is that there are so many things which we are using today which are mispriced. Meaning that glass bottle is so cheap that we can, although glass is very expensive to produce, very expensive and heavy to transport, the fact that we can use it just once and then throw it away, or it costs a lot to recycle, the fact that we can do that with impunity tells me that that product is mispriced. And so we need to think about, there's so many things in the world that we're doing today, infinite number of things that we're doing today which are costly, that are not being priced properly, and that we should be able to come up with, human beings are amazing, right? We can come up with solutions.
Simple solutions. Lily, would you say also that HerValue is trying to bring a simple solution to a complex problem?
Right. Thanks, everyone. Also, I will try to be entertaining and memorable because I'm standing between you guys and cocktail, so it's a lot of pressure here. And also, just want to point out before I even start is that you may see 3 women sitting here talking about ESG and impact. Like, of course, wow, that's so obvious, but no, there's a lot of diversity here, as our moderator has introduced in the beginning already, that the moderator herself represents the professional services industry and serving all sectors, all industries, and Ling represents the venture capital world and interacting with all the operators, and I represent all the Chinese women in finance and investments, right? So that's a very diverse view, especially I bring the view from the industry group standpoint. And I think the other point I would like to make is maybe just do a temp check with everyone in the room today. Raise your hand if you have a next big ask. That's something you want in your life, in your career. I definitely do. A big house, or promotion, or a $500 million fund, or better value in Bitcoin. I don't know, whatever it is, right? So I think just imagine your next big ask is striped away from you just simply because you fit in certain boxes. How is that even fair? And to us, asset management industry is really the ultimate test of meritocracy. So it has nothing to do with the boxes that we fall under. And at HerValue, we are the largest and the only women empowerment organization for finance and investments in China. And just to say that, Fidelity has done a study this year looking at the FTSE A50 index, and it shows that only 13% of directorship in China of all of those companies public traded in that index has a female board of directors, which is much lower than the 22% global average. And only 6% of them have a female board chair. I think for us, it's looking at an asset management industry in China that's standing at $20 trillion size as of today, which is a 10 times increase compared to 30 years ago. So this is a fast-growing industry, a huge size, with only 30 years of history, but no talks of diversity, inclusion, social governance whatsoever. And that's what's really exciting about HerValue. And also, we have a very good partnership with Salt Asia, and we are a very proud industry partner to this conference, and because we're mutually supporting each other's work in ESG aspect. And HerValue is hosting the first ever diversity and sustainability conference in China in just 3.5 months in Beijing and Shanghai. And I sincerely welcome all of you guys to participate if you're able. And I really thank all of HerValue's guests that's attending and supporting South Asia today, and specific this session on ESG in the region. And I think the ultimate question we always ask, coming back to your question, the ultimate question is, we always try to make a case and follow through a 4-step process. One, we try to make this a gap or opportunity that I talked about, this 20 trillion industry, very obvious, and the diversity inclusion aspect of it, very obvious, and then we try to make it very attractive. And also we try to make it easy for people to convert and change. And finally, we're making it rewarding. And I also want to ask people, you don't have to tell me the answer, is that if you knew you could make more money or generate more alpha simply by changing your culture to be more inclusive and diverse, would you do it? And hopefully throughout this panel, with whatever time we have today, whatever your answer is, if it's a no, I can convert you to a yes by the end of the session.
So it seems to me that we have the same answer to both the ESG and impact, so simple solutions to complex problems with no computation required. It seems that women should be running the world for a long time than the last few years. Let's maybe move to the where do you see the impact on ESG moving in Asia Pacific, and I think I myself have been based here for more than 8 years. I have seen a tremendous change in sustainable investment. It seems that the region is sort of leapfrogging into it. Do you think that the momentum will increase? Do you think that your conference in March will sort of awake many conversations about the governance and equality? Maybe Lily, if you can start to share some of the thoughts on that.
Sure. I think we are very optimistic, and that's why we pour so much time and energy into the women empowerment aspect, into the finance and investment industry. And I think just follow through in the 4 steps I shared with everyone to just make it even more obvious and make everyone feel they're part of the equation of the S and the G aspect of the ESG discussion today. Is women control over 30% of household wealth and contribute to 30% or even more than 30% of Asia's GDP. So that's just your sister, your mother, and your wife, your girlfriend next to you, right? That holds the pen to really the success of economic value in this region. And to us, I think the directorship numbers I shared about, 12%, and also 6% for chairmanship is doesn't correlate quite well with the percentage I talked about of how much women has control and influence over the economic value of Asia. And then further, I think what we've also tried really hard is making that change and seeing the trend. And I think a lot more industry folks are signing up to the concept of, oh, this is a very attractive idea. Yes, diversity, inclusion, being S and G focused makes me money, because according to the Investor Advisor Association, which collected 46 studies that has been done from 1995 until now, today, it looks at all of the gender and minority owned investment funds or investment managers, and concluded that with data even dating back to 1973, that diverse managers or women-owned managers and minority-owned managers outperform, right, the just benchmark. So, and I can go on and on about so many different studies, and you don't even have to spend too much time on diligence. There's just tons of study to show diversity inclusion is good business, it makes money, and it really drives results. So that thing kind of drives the business case a little bit further. And I think finally, we try to, again, make it easy for our ecosystem, and you don't really have to make a lot of efforts into changing your genetics or the way you operate your company, your investment structure or investment committee. You can simply just start by, signing up for so many different standards and framework that are out there that includes diversity inclusion, right? Or you even have a more open dialogue in your investment committee. So there's very simple steps without you have to completely revamp your business model, your investment thesis. And then we want to, again, I said make it very rewarding, right? Because for all the fellow asset managers out there, you will start to see your allocators are going to ask you more and more about diverse and inclusive and DEI data. And the recent ILPA survey showed over 51% of the LPs are going to ask you for that. So I think to me, that is a win-win situation. I know if I become more diverse, inclusive, I can make more money. And also my LP is asking for it. Why not? And I raise more funds. So I think to us, that's kind of the trend we're seeing. And we're glad to see a lot of asset managers are supporting that thesis.
So it sounds to me like we basically are reaching a tipping point. At what stage? It's a little bit like electric vehicles, I guess, right? We needed to get to the stage where we needed enough push and pull power in order for it to happen. So you sort of betting on the fact that it's coming, that we are near the tipping point in the women inequality, hopefully, and in Asia Pacific and sort of China as well. And do you see the same tipping points in the areas of your expertise within the ESG and the environment side?
Certainly in the environment. I mean, 80% of the globe is dependent on 20% of countries producing fossil fuel. It's very easy. Why does, between India, China, Indonesia, being able to break that cycle of dependence on petrol, on oil, right, is something that's very natural to want to do. The governments want to do that. And so I see, compared to 10 years ago, policy was not the big driver. Today, policy is a big driver, be it in India, in China. Actually, even in the last 12 months, we see the Indian government being even more aggressive with their policies. Why? Because India has become, it's where a lot of the issues with climate happen to them every day, between droughts and then floods, and then, there's all these things that keep happening. They have no choice but to do that. And if you see it's all interdependent, right? Between the ability to have tech, and then the tech being able to help you scale, and then have increased adoption, and then investment dollars get piled in because there is adoption, and then policy comes behind, or it becomes a virtuous cycle, and so we see that inflection point for sure, and it's very heartening to see that, and in Singapore, a country like this. We are small, but we are able to play an outsized role, for example, through the Sovereign Wealth Fund, someone like Temasek, which is driving the climate agenda through companies that they invest in here and abroad. So we see all these forces being interdependently and creating a larger virtuous cycle, and hopefully coming out and just like somebody says, you see a quote when you walk outside, Robert Swan saying that the problem is that we all think someone else is going to be saving the world. It's us. So I think it's something that bears reminding.
And you also would say that is the government role necessary in order to accelerate that?
In Asia, yes, we like the government telling us what to do. But to be honest, in the past, so I sit on the board. Going back to Lily's point, there are very few women on boards. I'm usually the token female on the board. I sit on 3 publicly listed boards. It's only in the last 2 years when the Singapore Stock Exchange and the Monetary Authority of Singapore had been forcing the issue with publicly listed companies to force disclosure, to force becoming more transparent with what they're doing, that the agenda has become front and center with management and boards. So you do need some of that policy.
Certainly, we see this the same with climate change regulation, both Singapore and Hong Kong. To be fair, I have never spoken with so many asset managers that don't have ESG focus because the regulation is telling them to disclose on at least their emissions.
Yes.
So they're going to have to run through what's material risks for them. How do they measure it? So I definitely see how the regulation is increasing, but it's sort of it's a carrot and a stick approach, right? That seems to be working quite well in Asia.
Yes.
I agree with you. Moving on to your personal achievements. I want to sort of end the panel and the conference on a sort of positive note of where do you see yourself, and how would you describe that your the journey in ESG has been successful? What, if you can talk to me a little bit about where what would make you proud of yourself in this sort of work in the coming years? I know, Lily, you've obviously Forbes 30 under 30, you still have a lot longer to go. But can I ask you to share some?
And I think, everybody remember I asked, what is everyone's next big ask? And I think everyone has their aspirations, and we should, because we're in the asset management industry. We're supposed to have our goals and our next big ask. And for us, and even for me personally, the success of more representation of women in the asset management and the finance industry, and more development resource and allocated to women in the industry. And finally, really for women to feel supported and represented is a success for me. So selfishly, I do hope all of the women succeed across all geographies in the asset management and finance industry and achieve our next big ask. Whether it be setting up your own investment fund, whether it be spending more time with family, or whether it be giving back to the society, whatever it is, I think is so important. Again, coming back to the big thesis we discussed, right? It's a $20 trillion asset management industry in China. No talks of diversity and inclusion and ESG, or the S and G aspect. And it can be as personal as the next big ask that I talked about, or it could be as macro as a mission-oriented, as we've been describing today. And I think in our industry, we are here to really, again, focus on meritocracy. Right? We're here to perform, to generate alpha, provide return, and find the next best deal and raise the next biggest fund. And I think we don't have to, hopefully, over the next couple years, we sit here again. We don't have to argue about, environmentally conscious, socially conscious, and highly corporate governance companies are performing or outperforming the other companies, right? Hopefully we can talk more about how we can even advance the agenda further and push the envelope further to different pockets of the world that have not had the resource that we had. I think personally for me, it's the next 3.5 months to really make this happen in China, because I want to also give a huge shout out to all of my team that are in Beijing and Shanghai. As you know, COVID situation had really kind of put China in a different landscape. And honestly, I'm quite fortunate to just be sitting here to be able to share with everyone my observations. But again, those women, the Chinese women in finance and investment in that 20 trillion industry for the last 30 years has not been touched with everything we discussed today. So hopefully we can influence the industry starting by the conference in 3.5 months. And hopefully for myself, I can help pave the way for other Chinese women and connect the Chinese women to 2 billion fellow panelists alike from the rest of the world as well. So that's, I think, the next big milestone.
Fantastic. What about you, Ling?
Yeah, for me, chairing EcoSpirits, it's as a green company, it's given me a platform to talk about climate. I never really was so much into it as now, and as I see us growing into thousands of bars worldwide, we have one called Smoke and Mirrors. If you guys are up for it, at the top of the National Museum, amazing bar, and you can go and see how the format works. And it's really help. So I see an ability to help startups, help Fortune 500 companies meet their net zero commitments. There's a huge business model there. And you know, because so many people have committed to it with very, like, so we're helping Pernod Ricard or Diageo meet their net zero commitments, and at the same time, you know, you can actually do good as well as do well. So you've got, you know, those double bottom lines, and I see it at work all the time. And so for me, it's a big sense of achievement.
Okay, so basically make the status quo the baseline and go for the higher hanging fruit, I would say, right?
Yeah.
Right.
And I would
Lots
just
of
want,
low-hanging
yeah, I would just want to add as well, since we talked a lot about the untapped opportunities to hopefully influence the bigger industry and sector. I think, you know, this ESG shouldn't be framed as so much of a burden. To all three of us as an opportunity, right? To look at things very differently. And I think that maybe the mass sentiment is like, wow, ESG, like I've already have to run my company, I have a long 1,000 to-do list, and also my investment fund has already enough to deal with. But again, I would just want to reinforce the fact that, you know, we've made it obvious of why ESG is good, and we've made it very attractive. We talked about the amount of performance and investment dollar coming into it. And we have also talked about how easy it could be, just as small as signing up to some frameworks that's already been proven by so many industry institutions. And it's rewarding because the LPs are asking for it. Okay,
I'm so glad you brought it up. Because I actually like to say, like, don't think of ESG as pain. It's actually gain. So many market opportunities, product opportunities,
exactly,
you know, driven by regulation. That's like the way in which you can make money, because they are driven by regulation. The needs and the requirements are driven by regulation. So I'm so glad you think of it as gain.
I think that was the same message that we received on the climate tech panel, right? That this is not going away. Rather than treating it as a unnecessary admin, look at it from opportunity point of view.
Exactly. So if you knew you could make more money simply by making your culture more diverse, inclusive, and your business more environmentally conscious, would you do it? Hopefully, you know, at the end of the session, your answer is really yes. So.
Okay.
Yeah.
Well, I think we are out of time, so just realized that there was a clock there. But thank you so much, everyone, for staying on the last session. I hope you enjoyed the panel. Thank you so much, ladies, and let's enjoy some of the eco spirits.
Thanks, everyone.
Happy hour.
Deserved
Thank you so
cocktail.
much.